Hello, everyone, and welcome to the NASDAQ Dorsey Wright podcast for the week ending August 23rd. My name's Ian Saunders, here with David Clark. David, good to be back sitting across from you.
Pleasure to be in the office,
Yeah,
as
get
always.
your monthly podcast inclusion on in
while
here.
I'm in the office here.
Right. Yeah, you're bringing the good mountain weather out here to Richmond.
At least a little bit of cooler weather,
Yeah,
compared to what it's been like over these past few weeks in Richmond. But
yeah, it's been good. It's waking up. It's in the 50s outside. It's a good feeling.
yeah, having to put a jacket on though kind of gives you that reminder that fall is right around the corner.
I'm ready for it. We got college football week 0 kicking off this week. We got NFL in a couple weeks. It's we're just talking about starting up our office pick'em this morning. So I'm a fan of the fall.
Oh, likewise. My wife hates it, but I like the fall, and it at least ranks higher than many other seasons. We'll go with that, if not my favorite season.
Well, it's kind of hard to tell what stocks feel about the fall over the past few weeks. It's been a little bit of back and forth, a little bit of up and down. We saw a near 10% downward move for the S&P and got like down to 9.6 or something like that.
And a crazy spike in volatility.
Big spike in volatility, which we talked a lot about. But then we rattled off 8 days of consecutive gains on the S&P that ended this week. It's kind of when that volatility spiked, I think most people were looking at it like this is probably going to be pretty near term focused, and a lot of our content that we were looking at was saying the same thing. But 8 days of consecutive gains is something you don't see all that often.
Well, and even then, in those instances where you see those typical strings of gains, it can happen after you see a pretty notable downside move like that. I mean, you're getting a rebound off of a bottom. So in some fashion, not crazy surprising to see a streak of gains, but 8 days is a rarity. Yeah. I mean, even looking at some of the things in the report, just moving past 8 days or even moving past a week is immensely rare for a lot of U.S. equities. But that also brought a lot of those U.S. equity charts back to buy signals this week, if not finishing off last week with returning to buy signals that actually brought, at least in the case of the S&P 500, returned it to a buy signal this week, moving above 5,600. So have seen enough positive action to, I wouldn't say completely negate or ignore what happened, obviously, but we're sort of almost in some fashion back to square one in a way when we started the month. And in terms of where you're seeing some of these charts beginning to break out, it's right about where they reverse down and to begin the month, or at least in the case of the S&P 500, that's what you're seeing there.
Yeah. I mean, S&P going back to a buy signal, that 5,600 point. I mean, we were talking about it, I think it was last week or at some point, certainly in the research. I mean, we rattled off multiple consecutive buy signals on the S&P. It hadn't given a sell signal since October of last year. It hadn't been moving straight higher. We've gotten some pullbacks and some consolidation, but it had been a very steady, sharp move higher throughout the first 7 months of the year, right? One sell signal and a strong uptrend is not indicative of a longer term trend change. I mean, that's something that was one of the first things I heard coming into Dorsey Wright. We've been talking, we said that a lot.
The first sell signal is not always
right. We got that sell signal. And then turn around and just gave a buy signal, like you said. I think one of the other charts was pretty interesting that I was looking at was we talk a lot about participation, right? We see the S&P moving higher. A lot of our mega caps leading the market higher. We've all seen the tweets or the tables online of what happened to the volatility bear market, like Nvidia's up 15% since that decline or something like that, right? But when you're looking at a participation, even from a near-term level, one of the charts we look at is the 10-week S&P, a 10-week for the S&P, the ticker's caret TWSPX on our platform, just looks at the percentage of stocks showing near-term participation, trading above their 10-week or 50-day moving average, right? We ticked up to 74% with movement yesterday, matching the highs that we were at back in July. Not the highest level we'd seen this year, but still pretty high. I mean, north of 80 is kind of what we typically look toward as like a breadth thrust. So we're not quite there yet. Hopefully have a little more room to go. I guess we'll see what happens with the Fed tomorrow and Nvidia next week. But I mean, the stocks are looking pretty good.
Well, and at this point, I would note that you're not just seeing the 10 weeks that have moved higher. They're obviously sitting at higher levels, but you've seen those 30 weeks and 40 weeks reverse back up, indicating that we're seeing stocks move back above their 150 and 200-day moving averages. And sort of towards the end of last week, we got an initial sort of move out a lot of the bullish percents as well, which I would say kind of got capped off with today's action with the bullish percent for the NYSE reversing back indexes. It's probably the biggest universe bullish percent, and it's definitely the bullish percent we talked the most about. But we saw it move back indexes above that 50% mark there, 52% with today's action. So, like you said, it's seeing that short term, but also seeing some follow through on the intermediate term. Haven't quite seen the PTs react yet, but it's also interesting to look at some of the PTs because there were a few, especially on that subsector level, that you didn't see reverse down, or if they did, they didn't see as much impact. But that's a tangent.
Yeah, I mean, I think you brought up a good point though, that the small cap stuff is, or not the small caps, that's what I'm looking at here. The 10-week S&P is high, right?
Mhm.
So intuition would lead you to believe if it's high, it has to come down. But typically we actually look at it the other way. I mean, yeah, it might be high, it might come down, but that doesn't mean it's bad moving forward.
Right.
When it's high, if it gets really high, that's where we get to that breadth thrust conversation. So I've seen breadth thrust starting to be tossed around online in different areas. I don't think we haven't quite gotten there yet from a lot of our indicators, but that's definitely one thing that we'll kind of be keeping an eye on as we head toward September. I mentioned the small caps right at the beginning inadvertently, but I think the small cap picture is pretty interesting too. I mean, there's a lot of talk about small caps in mid-July. We saw a plus 5% day for IWM relative to the Qs, right? It's not often you see the Russell 2000 outperform the NASDAQ 100 by 5% in a day. And when we see that, it has historically shown more positive improvement for small caps moving forward. Small caps then turned around and got beat up with the broader global equity decline. But if you look at the point and figure chart for IWM, it's a pretty good looking chart. And you've gotten consistently higher highs, a couple higher lows now. And we're sitting in more normalized trading range, right above the midpoint on a trading band and a suitable fund score. I mean, it's not a bad looking picture.
Well, just looking at yesterday's action in a vacuum of looking at the 20th action, you actually saw the Russell and the equal weight, S&P equal weight lead the way for U.S. equity indexes. Obviously, one day it does not make a trend, but it at least is somewhat of a differentiation from what we've seen for, say, the past 8 or 10 prior days in which it was mostly the large caps. It was the S&P, it was the Dow, it was the NASDAQ 100 that you were seeing. So admittedly, when I was looking this morning to see the Russell up there with yesterday's action, that sort of was one of those things that make you go, huh. And I mean, to your point, while we got sort of this retraction, it's not like we saw a massive material impact to some of those small cap funds from a long-term technical perspective. I mean, probably in many ways, it bought them back to viable ranges if you're looking to add small caps. So
yeah,
there's some silver lining there.
That breadth conversation, I think, is definitely something kind of interesting to look toward. We can keep running through different charts that are at or near all-time highs. Yes. But one chart that's definitely not at or near all-time highs is the dollar. Right. I mean, if we're kind of pivoting conversation there, we know we've had a few bits in the research report throughout the past week. But the US dollar, ticker DX/Y on our platform, fell into its most oversold condition that we'd seen in several years, since 2018, I believe.
Actually, looking this morning, I rolled back through some of the data because we saw it get more oversold after yesterday's action. Mm-hmm. And we're now down to 2016 when we looked there for the most oversold level. So, I mean, nonetheless, it's extremely oversold. Right. It's sort of drawn straws on dates. But when we're seeing something, anytime any security or anything like that is below the middle of below the bottom of that trading band on a point and figure chart, you're highly oversold. You're extremely oversold. And with today's action, or pardon me, yesterday's action, we saw crude oil come down to test that support there at the dollar, pardon me. I was looking at a different chart about what I got. The dollar come down to test that support there at 101. And that was the chart low from December of last year. So seeing that tested, there's a little bit of extra support there at that $100 mark from July of last year. But really after these two levels, you're seeing some further potential for downside. But
Yeah, I
We'll
mean,
see.
yeah, I mean, the dollar has been between 100 and 107 since November of 2022, right? I
Mhm.
mean, it's just right after we saw, I mean, multiple consecutive streaks of consistent trends, positive or negative, multiple consecutive sell signals, multiple consecutive buys, multiple consecutive sells in 2022 into 2023 to kind of cap off that consistent trend environment. Yeah, we were like, what's the dollar ever gonna like just give alternating signals? And we get what we asked
By
for.
the way, Jay,
Right?
yeah.
You go buy, sell, sell, buy, sell, right? It's just kind of sideways. You can see
Right.
that very clear trading range depicted on the chart. And like you said, we're at the bottom of it. So we wouldn't be surprised to see a little bit of a reversion back to the upside, right? If it breaks this trading range, that could be more of a cause for concern for the dollar. But one area that's shown some improvement on the back of this has definitely been international equities, which historically been dollar moves lower, international moves higher, which kind of makes sense intuitively. But we've seen that start to play out across a few different areas, right?
Right. Well, and today we were just talking about before jumping on the video. Both of us have been watching for EFA to return to a buy signal and does so with today's action, moving above that $82 level intraday. Now, moving forward, that $82 level is pretty significant because there's resistance there that dates back to 2021.
Yeah.
And
the fifth consecutive time it's been up at that level, I believe.
So there's maybe a little hurdle there for it upcoming.
Yeah, but I mean, each time, so we saw it happen 3 times in 4 months in 2021. It reached that $82 point and then ultimately moved consistently lower throughout the next year, right?
When I would say that's probably the caveat to this time is ultimately we saw that level matched back in June, saw an initial sell signal, but now we've seen that resumption back. So we haven't necessarily seen a continuation of downside just yet.
Exactly. Yeah.
It's been, at least for the moment, a reversal back to say, okay, demand's still in play here in this picture. So it's at least somewhat of a different tone to it, if you will.
Yeah, no, I think that's a super fair point, right? I mean, it's we're hoping for that 83 breakout, which would be kind of new multi-year highs there for EFA. But when you're looking at some other relationships, I mean, EFA breaking out still is a suboptimal fund score. One of the charts that I've liked looking at over the past couple of weeks has been comparing ACWX, the broad ex-US ETF, against UUP, the Invesco Bullish Dollar Fund. Look at those on a relative strength chart on a 2% scale. It shows pretty consistent signal history over time. Now, I'm going to jinx it again, saying it's consistent, right? Pretty consistent. We got 2 consecutive buy signals, November of last year, July of this year. Turn around, gave a sell signal in August. But now is reversed back up, given another buy signal, and is kind of sitting at a relative resistance point. We don't look at resistance the same way on relative strength charts, but it's showing attempts at moving higher. It's showing that international equities are trying to pick up more bullish action from the U.S. dollar decline, right? So I think that'll be another pretty interesting relationship. That if you're looking at signal history, it's been a pretty profitable RS switching strategy over time. Not that that's the sole strategy you want to use for your international equity exposure, right, but it's worked out pretty well.
Right. Yeah, and it's like you said, it's a good sort of benchmark for understanding is international being favored at this moment in time, and that's at least for now looking at where we sit in terms of what options you're looking for exposure. I mean, international continues to be a part of the conversation. Every once in a while, it sort of gives us a reason to maybe hold tight, but so far for the past couple of years, it's definitely been a conversation. Yeah, deserves to be said.
It's been there. So that when international equity is gonna have their day in the sun, right? I mean, it's been, we saw throughout a lot of the 2000s, international equities did pretty well, right? All the 2010s international equities did not do too well. But I will say relative strength does give you a little bit more opportunity to kind of pick up those leaders, avoid those laggards. But when you get an period of improvement for international equities, that would definitely be one area to look toward. If we get more weakness from the dollar, probably will be a good thing for international stocks.
Well, and it's interesting to sort of talk about that relationship with the dollar and international stocks, because I mean, even the dollar's downside movement, ultimately with the dollar not driving too much into detail here, drives that currency tally signal as well. So I mean, if we were to continue to see that dollar move lower, I mean, that's boding well for those international currencies. So it would be worth continuing to monitor there. At the moment, not much out of that asset class other than this short term what we've seen as far as the dollar moving in no oversold territory.
Yeah.
No further developments than that. But like we're talking about, if we're continuing to see impacts elsewhere, there's another asset class that would be worth at least keeping an eye on. You may not be adding as much exposure, or if any exposure to it at all, but
Yeah.
It at least gives you an idea of where relative strength can be found, and it gives you further confidence in potentially adding international exposure or possibly getting more aggressive in international exposure if you were to see these things gain positive RS. So that's a what to watch for, maybe to keep an eye on type of thing.
Yeah.
Within Dolly.
Yeah. So you're gonna start trading currencies?
No, I'm gonna stay away from that.
Stay away from that one. Yeah. Definitely be a lot to continue to keep an eye out on. But I mean, we've been through a lot of different kind of charts and indicators here. Do you have anything else you wanted to run through?
Not at the moment. I mean, we could have a 45-minute podcast if we ran over all the news and details of the week here, especially if we dive into individual companies. I mean, you saw some positives out of retailing. I mean, we saw semis and even the building sector rally back here pretty furiously. Like I mentioned, big earnings week for retail, but I would imagine most people have probably seen headlines for most of those at the moment. So.
Yeah. And there'll be a lot more headlines. You mentioned semiconductors with NVIDIA reporting next week. I know everybody's gonna have their eyes on that. So should have a lot to talk about for next week's podcast.
For sure.
So great. Yeah. Thanks, David, for joining us here during your time in Richmond.
Yeah. Appreciate it as always.
And thanks everyone for tuning in this week. We'll be back to touch base with everybody next week.